Hello, and welcome to the Nevada Housing Division Home is Possible Real Smart Crash Course. This course is designed to educate realtors about the value of our programs so that you can provide the best options available to your potential home buyers. Let's get started. Much like you, we want to help hardworking Nevadans achieve the dream of home ownership. Do you have clients who qualify for mortgage financing, but however, just don't have enough funds to cover down payment and closing costs? The roadmap to home ownership. The Home is Possible team works with over 100 approved lenders who have been vetted and approved to participate in our program. Once approved through one of our participating lenders, a borrower just needs to find an experienced real estate agent so that they can get the keys to their new home. The Home is Possible Down Payment Assistance Program. Since our inception in 2014, we've helped over 25,000 families with buying a new home. Our loans now total over $5 billion. We've assisted 1,600 veterans in using our programs, and we've helped 1,000 teachers, Nevada public school teachers, with the purchases of their home. Let's take a moment to discuss our funding source. We have a continuous public-private partnership. This means that non-government funds are used for the funding of our program. Why this is important is because we do not rely solely on grants, which means our program does not run out of funding. We are available all year, every year. Let's discuss briefly the HIP processing overview. Lenders are required to reserve the loan through eHousing Plus, which is our online compliance company. The lender must have an executed purchase contract in order to reserve the loan. Once the loan is reserved, eHousing Plus will generate disclosures for the home buyer. The lender must provide these disclosures to the home buyer within 3 days of initial reservation. The lender then funds the loan and the down payment assistance. U.S. Bank, which is our master servicer, will reimburse the lender for the second mortgage once the loan has closed. Why do we mention this process and what does it mean for realtors? Well, essentially, it means that we do not participate in the escrow process and we do not delay closing in any way for your buyers. Let's discuss the HIP overview and how our down payment assistance works. Our down payment assistance does come in the form of a second mortgage. It is a lien recorded against the property. There's a zero interest on this mortgage, and there are no payments required from the borrower, and it is forgivable over a 36-month period or more, which we'll discuss later. Here's an example of our down payment assistance and how it works. Remember, our down payment assistance is based on the loan amount, not the purchase price. So for an example of a loan amount of $300,000, a lender could either put a buyer in a program for a 2% grant, which would provide them $6,000, a 3% grant would be $9,000, a 4%, which would be $12,000, or a 5% grant for $15,000. The maximum grant that a borrower can receive from our programs is $20,000. When would a payoff be required for our program? If the borrower ceases to reside in the property, prepays or refinances, sells, transfers, or otherwise disposes of the property prior to the 36-month forgivable period. Please take a moment to review the mortgage options for our program. As you can see, the Home is Possible loan is available in the FHA, VA, USDA RD loans. These are all government loans. It is also available in a conventional loan, Fannie Mae or Freddie Mac. There are 4 types of Home is Possible loan programs. Our standard Home is Possible DPA, the HIP for Heroes, the HIP for Teachers, and the HIP for first-time homebuyers. All of these programs are available statewide and the home buyer education is required. You cannot own another property at the time of purchase when using these programs. Let's discuss the standard Home is Possible down payment assistance. Key benefits. We provide up to 5% of the total loan amount. It is usable for down payment assistance and closing costs. There's no first-time homebuyer requirement, and we do offer an attractive interest rate for a fixed year, 30-year fixed mortgage. As we mentioned, this down payment assistance does come in the form of a second mortgage, which is recorded against the property, even though there are no payments and no interest. It comes in the form of a 3%, 4%, or 5% DPA with the standard home as possible, and it's forgivable over a prorated 3-year period, which means each month that the borrower stays in the home, we divide that total amount that they borrowed by 36 and forgive that 1/36 each month that the borrower stays in the home without selling, refinancing, or transferring the property. Great news! If you don't want to commit all of this information to memory, we encourage you to visit our website where we've created an interactive rate sheet. If you visit our website and look under the Lenders tab, under today's rates and offerings, we update our rate sheet each day. When you highlight and hover over the individual product, not only will you see the rate for the day, but it will also provide a brief highlight of the benefits and the rules to each product and its offerings. This way, it's a gentle reminder of exactly who fits into what type of program, the type of benefits available for that program, and the rules. Home is possible maximum income limits. The maximum income limit for all family sizes is $98,500. This means that all borrowers on the loan application must have income that does not exceed $98,500. This is the maximum income limit for all of our government loans. The maximum income limit for conventional loans does vary slightly, and we will get into that a little later in the course. Eligible properties. All primary residences are eligible anywhere in the state of Nevada. We have no geographical restrictions in the state. This applies to new or existing properties. Remember, they must be primary residential units only. This includes single-family residences, condos that are approved by our master servicer, townhomes, and manufactured homes. Let's discuss some other program requirements. Homebuyers cannot own another property at the time of close. They don't have to be first-time homebuyers, but they certainly can't own multiple properties when using our program. The buyer must occupy the property within 60 days of closing. The borrower must use a participating lender. As we mentioned, the lender is going to apply for the program on the borrower's behalf, front the funds to the borrower, and be reimbursed by us later, which means that it is essential that the lender must be approved to participate in our program. All borrowers for all programs must complete homebuyer counseling. This is essential because it provides information for the borrower on what to expect during the homebuyer process, how to become eligible for home buying, and how to sustain homeownership. All titled borrowers must complete this course. They have 3 options. They can attend a Nevada Housing Division sponsored homebuyer seminar, they can take our online approved course, or they can take a HUD approved course from a counseling agency. We do have a list of recommended counseling agencies on our website, but they are not required. You must take a HUD approved counseling agency course and submit it to the lender in order to be approved for the program. Now it's time to review those conventional loan income limits for our program. The conventional loan income limits are different from the standard government loan income limits for our program. Conventional loan income for borrowers must be at 80% of the area median income or less. This means that all loan applicants using Freddie Mac or Fannie Mae conventional loans must have an income that does not exceed 80% of the area median income for their corresponding county. In Clark County, the example is $56,640. That is the current 80% area median income for Clark County, which means any borrowers for a conventional loan using the Home is Possible program cannot have an income that exceeds $56,640. As we mentioned, we've helped over 1,600 military families purchase a home. We are extremely proud of that here in Nevada. We are striving to help veterans through our HIP for Heroes or our standard HIP program, DPA, with VA financing. Let's learn a little more. Our goal is to make Nevada the most military and veteran friendly state in the nation. Our Home is Possible for Heroes offers a below market interest rate on a 30-year fixed rate mortgage. It's usually the best VA rate in town. There's no first time home buyer requirement, and it is eligible for VA and USDA RD loans only. We want veterans to feel at home. A discounted interest rate is a great place to start. Let's discuss who qualifies for these programs. Veterans who have been honorably discharged, those serving on active duty, surviving spouses, National Guard service personnel, and anyone that can provide a COE or DD 214 to a lender. So essentially, any borrower who qualifies for VA financing would qualify for our HIP, a program for heroes. Now, our standard Home is Possible for Heroes. It requires qualifying income of $98,500. This means that all borrowers on the VA loan must have an income that is below $98,500. The home purchase price must be below $548,250 and a minimum credit score of 640. Once again, this program is solely for VA and USDA RD loans. Let's take a moment to compare and contrast the HIP for Heroes versus our standard HIP DPA. Our standard HIP DPA is a government insured loan. We provide 2% and 4% of down payment assistance for VA financing borrowers. This comes with a 3-year prorated forgivable period, much like our standard Home is Possible. The HIP for Heroes does not provide down payment assistance, but as you can see, the HIP for Heroes first mortgage loan is significantly lower than the standard VA financing down payment assistance. Let's take a moment to review our very popular Home is Possible for Teachers program. This is a program designed to help Nevada's public school teachers. At the Housing Division, we believe that education is a cornerstone to growing our economy. In order to best provide support to the education system, we provide support to Nevada public school teachers. Let's discuss some of the benefits. This program offers a flat $7,500 in assistance in the form of a second mortgage with zero interest and no payments. It's usable for down payment and closing costs. It's forgivable after 5 years, so this is different from our standard HIP program of 3 years. This program is for 5 years. It is forgivable and prorated each month, which means each month that the teacher stays in the home without selling, refinancing, or transferring the property, we forgive $125. We certainly don't require the teacher to be a teacher for 5 years, but we sure hope they will. They must be a licensed, full-time, kindergarten through 12th public school or public charter school teacher in Nevada at the time of application. Additional requirements for the HIP for Teacher program. Qualifying income for this program is $98,500. This applies to the teacher, teacher's spouse, and any eligible co-borrowers. The purchase price limit for this program is $510,400, but we encourage you to double check with FHA agency county limits, which vary for loan limits. Also, the FICO requirement for this program is a 660 minimum credit score. It requires a 45% debt to income ratio. The loan types for the HIP for Teacher program vary as well. Government loans only are VA, FHA, or USDA RD. The HIP for Teachers program requirements. You must have a 660 minimum credit score required for FHA and 640 for VA USDA RD loans. Homebuyer education course is required, as always. The teacher cannot own another property at the time of closing, and they must meet standard underwriting requirements for either FHA, VA, or USDA loan. Let's take a minute to look at the highlights for this program. As we mentioned, our rate sheet is interactive. So if you go onto our website, look at the teachers program, it will give you the updated list of the rate for the day as well as the highlights for the program. We highly recommend you use this resource. Fees. There's a lot of questions about fees for our program. The program does charge fees. They include a lender origination fee of 0.5%, the U.S. bank fee of $400, and a tax service fee of $80. Our online compliance company, eHousing Plus, charges a program fee of $275. We record a second mortgage and pay recording fees, which must be 1% or less of the total down payment assistance. So, for example, in that teacher's loan, 1% of the $7,500 would be $75. The recording fee for the second lien could not exceed $75 ever. Our fourth and final HIP program is our first time homebuyers program. This is designed to help borrowers who have never owned a home. Let's discuss some of the key benefits. We offer a 30-year fixed rate loan. It comes in the form of 2% of down payment assistance. This means 2% of the total loan amount in the form of a second mortgage with a zero interest and no payments. Unlike our standard HIP programs, this program is forgivable after 7 years, and it is due upon sale or refinance. It is not prorated. This means if the borrower uses this program and stays in the home without selling or refinancing for 6.5 years, they would still have to repay the full amount. You must stay in the home for 7 years in order to avoid repayment. Some requirements for the first-time homebuyer program. The borrower cannot own a primary residence within the past 3 years. Our federal government defines a first-time homebuyer as someone who has not owned property or paid mortgage interest in the past 3 years. The minimum credit score for this program is a 660. They must be new or existing properties, single-family residence, townhomes, and manufactured homes only. The government types are FHA, VA, and USDA RD. There is no conventional loan product for the first-time homebuyer program. The income limits and purchase price limits vary for this program. For example, in Clark County, the income is determined by the household size. So a household of one or two people has a limit of $75,000 for the first time homebuyer program, and a home of three or more people has an income limit of $86,250. These are the maximum income limits for the first time homebuyer program. The purchase price limits for this program will vary as well. As you can see from the example shown, the limits for Clark County in Nevada purchase price is $306,357. This means that a borrower who meets all the requirements for the first-time home buyer program and chooses to use the program must purchase a home that is less than $306,357. Now that you've learned a little bit about our programs, let's review how you can use that information to market to potential home buyers. On our website, homeispossiblenv.org, we encourage you to visit our marketing materials page so that you can view a list of brochures that are customizable and downloadable so that you can market to individual home buyers looking for different programs. You're also welcome to go on our website and create our profile. If you go into homeispossiblenv.org and look at the top right-hand corner, we have a spot for lenders and agents to sign in or sign up. Once you create a profile, we encourage you to update it with and make it your own. Add your picture, your contact information, of course, but a brief bio that tells borrowers and home buyers what to expect when looking for your service. We get over 10,000 page views per month, and the average HIP agent that's registered on our program gets about 400 to 500 visitors per month. Please make sure that list that you are available for all programs so it's easy for borrowers to find you. Please go onto our website and sign up as an agent, not a lender. You don't want borrowers calling asking very complicated lending questions. You want them to call you when they're ready to go out shopping for homes. This concludes our Home is Possible Real Smart Crash Course. Our mission here at Nevada Housing Division is to strengthen communities here in Nevada. We believe with your help, we can make homeownership affordable, one Nevada family at a time.